market to trade as well. So we will continue this discussion on another day. Thanks a lot for joining in. That is the word on the metal space. By the way, the market is now looking like it's going to be a pretty ugly picture this morning. Mitesh is joining us yet again. Mitesh, what's the big call at 9:10? Looks like it's going to be a big gap down opening this morning.
It looked like that, and therefore I think we had more of sell recommendations. I'll go with the sell on Maruti. I think let's see where it opens. But if it's about 0.25% or maybe even 0.5% lower, sell with the stop at about 85.90 for targets of 84.50.
Okay, a sell on Maruti. Two stocks that we're looking at this morning. One is Tata Motors. It's bucking the falling trend because Tata Motors has announced that their subsidiary Tata Technologies will be filing for a DRHP with the SEBI for an IPO. Now, remember, Tata Motors holds about 74.4% stake in Tata Technologies. And Tata Technologies, as we know, is the IT services arm of Tata Motors. It has captive clients in the form of Jaguar, Land Rover and Tata Motors. And, it's had a very strong growth. In FY22 itself, the revenue growth was the strongest ever at 46%. Now, Tata Technologies plans on selling up to 9.5 crore shares, which is 23.6% of its paid-up share capital. And Motilal Oswal put out a note where they are ascribing a value of 25 to 47 rupees per share in Tata Motors for its stake in Tata Technologies. Now, monetization of stake in Tata Technologies is, of course, a positive. But along with that, there's also the receipt of the consideration of the EV deal that they did with TPG. So that money comes in as well. Put together, the monetization of stake plus the receipt of the money from the EV deal will help them reduce their debt. And they're on track to achieve net zero debt on the India business versus about 12,000 crores, which is the debt currently. Just very quickly, Tata Technologies, the recent financials are looking very good. Revenue growth of 15% in 9 months of this year, profit growth of 23%, and the adjusted margins have grown quite a bit. It was 16.5% in FY20 and it's about 19.2% now. So win-win over there. The other stock that I'm looking at is Olectra Greentech. So very quickly, just get that on board. The Maharashtra budget has proposed purchase of electric buses and the conversion of 5,000 diesel buses into LNG run vehicles. So that's a positive. The additional positive, when we spoke to the management yesterday, they said that they are the lowest bidder now for a tender by CESL, which is for 13,000 electric three-wheelers. So that's another stock to look at.
Okay, so those are the two ones. Well, the pre-open rates have settled and it's in sync with the SGX Nifty. 1% gap down is what we're heading in for. And obviously, as you would imagine on a morning like this, not too many support pillars. Metals are shaving off. Banks look weak in the pre-open. Mitesh, very quickly, any final advice as we get into the open?
Well, I think, once post the opening, because this looks like a very severe one, I think let's see if we try to find some base on an intraday basis around 17,400, 430 zone. If that level holds, there's a chance of a good pullback, which would be a better exit opportunity to people who have been trading with long price. Otherwise, 17,400 and below, I wouldn't want to hold any bonds.
Okay, by the way, in a market like this, when overall the trend is weak, you'll see vulnerable stocks perhaps fall a little more. So this morning, all the Adani Group stocks, once again, could resume their downtrend. Adani Wilmar is showing me there's a loss of about 4% there. Adani Enterprises down 4.5%. Just keep that entire pocket on your radar. And looks like banks are also going to sell off quite a bit. The Bank Nifty itself is down about 450 points. Very quickly, about 30 seconds left, Mitesh, a quick word on the Bank Nifty.
See, between the two indices, it's been a better one, but 41,000 is the level to watch out for. Below that, again, I think, don't hold long positions.
Okay, all set for the market opening. Remember, a couple of levels to watch. The 200-day moving average of 17,400 or thereabouts is something that has been a good support for a while. Does it hold today? Time will tell, but that's an important level to watch. And on the upside, as we know, 17,800 has been a bit of a resistance for the market. So these are sort of the markers on the index. The first tick is not looking good. It's quite an ugly picture that we have this morning. The Nifty is down 170 points straight off the back. That's a 1% crackdown in early morning trade. The Sensex has lost almost 700 points, and it's the Bank Nifty that's really dragging